How is a systematic approach very different from a fundamental approach?
Systematic side, obviously, we are following the process in a completely disciplined manner. So it's largely rules based. Obviously, there are places where the fund managers can intervene, but that is more from a risk management perspective. So for example, in FlexiCap, we have very tight sector bounds and stock bounds relative to the benchmark. And those are, small ranges, typically, 1.5 to 3% on the stock side, similar on the sector side. There, of course, if some risk events are there around some sectors or some stocks, then the fund managers can step in and tighten those bounds, for example, right? So those kind of risk management interventions. Then we have a corporate governance screen. There also it's, partly automated and partly a manual decision. So some of these from a risk management perspective is where the fund managers come in. But other than that, the data that we are using, the signals from there, which metrics we want to give importance to, not give importance to, what weightage those signals have, all of that is predefined, and the process will follow that rigorously every week, right? And secondly, it's a weekly rebalancing process in Flexi, which is again very different from the rest of the market. So both the systematic element where it's largely rules based, the sector stock bounds being very benchmark aware and therefore having, narrow constraints around their weights in the benchmark. These are all things which are very different from a fundamental approach.
Mutual fund investments are subject to market risks. Read all scheme-related documents carefully.